336 294 USD selling X falling yields X gold surge. A week where the trades you were supposed to take lined up perfectly after the FOMC. Trading results, deck dwellers. Weekly total 366 294 USD. This week, the market rewarded those who embraced the classic post-FOMC playbook, falling yields, weaker USD, higher gold. By aligning directly with this core macro trend, the result was one of the largest weekly profits of the year. Review of the week, decade. Bottom line, after the FOMC, this was not a week to overthink. It was a week to simply follow the flow. The FOMC clearly marked a phase shift in the market. FOMC rate cut, short-term treasury purchases de facto easing. The FOMC delivered a 0.25% rate cut, introduction of short-term treasury purchases, a clear shift in focus from inflation toward growth and financial conditions. The market reaction was textbook. U.S. yields declined. USD weakened. Real yields fell. Gold surged. USD JPY, the 156 area, was the ceiling. Early week, pre-FOMC positioning and higher U.S. yields pushed USD JPY to 156.95. After the FOMC, falling U.S. yields reversed the move. Sharp drop to the 154.90 area. Consolidation around 155 ahead of the BOJ meeting. Assessment. With U.S. rate cuts underway, BOJ rate hike expectations building, the U.S. Japan yield spread is clearly narrowing. USD JPY was not a market to chase higher. USD, a clean expression of structural USD weakness. Clear breakout above the Ichimoku cloud after the FOMC, rally to the 1.1760 area. EUR-JPY reached the upper 182s near historic highs. Background. ECB discussing an end to rate cuts. OS. Firmly entering an easing cycle. Yield differential logic fully justified EUR buying and USD selling. The star of the week, gold Sausty. Why did gold rise so perfectly? The reasons were remarkably simple. USD selling after the FOMC, clear decline in U.S. yields, falling real yields, year-end risk diversification demand, everything aligned in gold's favor. This time, the key was not trading the initial spike, but staying positioned for trend continuation, which maximize returns. Outlook for the week of Deck 15. The market focus narrows to three key themes. Buena, USD JPY, expected range 153 L0 157 ZOR. Key event, BOJ monetary policy meeting, Dex Sodrente Zemuname, Governor Ueda's press conference. Market baseline, a 0.25% rate hike is over 90% priced in. The real focus is what comes next. Scenario split, hike cautious tone, end of hiking perception, JPY selling. Hike hints of further hikes. Accelerated JPY strength, this is the fork in the road. JPY weakness despite a hike versus JPY strength because of a hike. Tuai USD. Expected range 1.1350, 1.1950. ECB expected to stay on hold. End of rate cuts, eventual hike discussions. OS firmly easing. Structural EUR advantage remains intact. Political risk. French parliamentary debate on the 2026 budget. Key events week of Deck 15. Top tier events. BOJ monetary policy meeting. OS CP US employment report. ECB and BOE policy decisions. Final summary. The reason this week was successful is clear. Correctly identified the post-FOMC market structure, focused on the core theme USD selling and falling yields, avoided unnecessary counter-trend trades. Next week represents one of the final major decision points of the year. BOJ messaging ex-US. Inflation. In year-end markets, discipline matters more than ever. If the theme fits, trade decisively. If it doesn't, stay out. Afterward, how you use medicine is not so different from trading. Thank you for reading this week's FX report. This week's topic, misconceptions about antidepressants, is surprisingly relevant to traders. Antidepressants are often misunderstood as just boosting serotonin, changing your personality, creating dependency. In reality, they are subtle, gradual, and require adjustment over time. This closely mirrors trading. Over-expecting instant results leads to mistakes. Antidepressants are not magic pills. They gradually rebalance the brain over weeks. Trading works the same way, expecting one strategy to win instantly, one data point to change everything, only increases emotional instability. Patience is a survival skill. What works is different for everyone. Just as medications affect people differently, there is no universal trading solution. A pair or time frame that works for one trader may be pure stress for another. What matters is, adjust when it doesn't fit. Don't force continuity. Return to data and verification. Relying on tools is not weakness. Antidepressants are not escape, they are treatment. Likewise, cutting losses, reducing position size, stepping away temporarily. These are not signs of weakness, but of healthy risk management. Conclusion. Markets and minds both require maintenance. Just as antidepressants don't instantly fix life, trading is not defined by a single win or loss. Reduce assumptions. Verify with data. Move at your own pace. That approach may seem slow, but it is the most reliable path in both markets and mental health. Next week, stay calm, stay disciplined, and face the market with a well-balanced mindset.